Let's get some practical advice for you for the Janus Capital Advisors Day. We're joined now by Rick Keller, chairman of First Foundation, and Chad Schiel, CEO of Schiel Wealth Management. Chad and Rick, thank you for joining us.
Oh, thank you for having us.
So, Rick, first to you. Okay, so we've heard a lot of scary things. I mean, Brexit, all this negative yields, whatever. Hard to find money in any yield in this world. Where are you putting your clients that they are getting some relatively safe returns these days?
Well, if you think of the core and explore, the core looks very unattractive, especially for taxable investors. So right now I'd be careful of what you own in the municipal bond area where prices are extremely high. So for us...
Too high?
Too high.
You think muni bonds are, as a group, overvalued?
Yeah. Well, for instance, in one of the closed-end mutual funds I looked at, bond, their largest holding was priced at 135. A lot of depreciation is going to take place over the next 15 years over that bond. So for us, I think adjustable rate bank debt, where you don't have the duration risk, but you are taking credit risk. Another area, high-yield bonds. If you looked at HYG, the bonds is selling at 100, whereas if you look at AGG, the typical bond in that is selling at 107. So Bill's approach in terms of looking at the Explorer, I think, is a way to go. And we look at Bill Gross as kind of the Wayne Gretzky of the bond world, where, you know, it's not where interest rates are. He's always
where they're going. Yeah,
where they're going.
Go where the buck is going, not where it is.
Right. So
Chad, you know, you're focused. You're a younger guy. You're building your business out. So focus more and say, I don't want to say the millennial, but the younger investor, who, by the way, has been burned through the financial crisis. Right.
Yep.
We're looking at almost no yield, no returns anywhere. First off, how do you convince a 35 or a 40-year-old to even invest in this kind of environment?
Well, surprisingly, most of the people that I'm working with are actually baby boomers, but it's just active leadership. You know, it's leading from the front. It's giving them sound advice for their particular situation. You know, everyone's different, and so we really just try to really cater to that individual, to their time horizons.
Are they scared now? What's the mood of your client?
Yeah, the mood in general, you know, especially for the younger folks, and really just everybody is, you know, they've been burned. They are nervous. They're scared. There's definitely a trust paradigm, and so it takes time to build that with folks, and, you know, folks like Rick, and there's a lot of other good advisors out there as well, myself and my partner. You know, we do what we can. We really work hands-on with our clients.
I'm glad we're talking. I'm glad we're talking, so take this, I mean this with all due respect. Yeah. The one thing it's hard to talk to financial advisors about is say, give me ideas. All your clients are different, right?
Everyone's
different age, different risk spectrum, different. So for the general, if we could just sort of make an average client, no client is average, I get it. But for the average client, Chad, what are you advising them to go into today? That's sort of
right now?
A little return, a little bit of risk, not too risky. What's a good portfolio?
We've been buying a lot of the publicly traded REITs. You know, they've been beat down. You know, you can get an attractive yield there. That's one place. We've also been, we're very interested in what Bill is doing. The very nature of the bond market is that it's going to have to get more creative. You know, the 40 years of falling interest rates and expanding credit has created this environment unlike anything we're going to see in the future. So it's going to be partnering with people like Bill and partnering with advisors that understand that it's not going to be the same looking forward. We're going to have to do things differently, and we're going to have to lead differently.
Yeah, so I assume, and I hope, that you guys watch CNBC, correct?
Of course.
Every day. Fair to say. Thank you. We love you for it. We talk a lot about the Fed and Brexit and China. What are your clients? That's what we talk about. What are your clients talking about? The same things?
Where are we going to get yield for their lifestyle demand?
What are they nervous about, though? When they call you, Rick, I'm scared of...
Almost everything scares them today. You know, I think the election is top of mind because you have really polarized candidates there. I think that's a big issue. Also, in terms of the Fed, the rising interest rates.
You think the Fed will raise rates next week?
Not next week, but I think July is definitely on the table.
All right. Hey, Rick Keller, Chad Schiel, it was a real pleasure, you guys. Thank you. Get in there. We're going to have a panel here coming up soon, so we'll go in there and we'll see you again.
Wonderful.
So, thank you both very much. By the way, folks, we are all over this market sell-off. It is a risk-off day, if you want to call it that. Stocks are down. The risk of a Brexit is up. There's the Dow. You can see down 0.9%. The NASDAQ getting walloped, down 1.5%. More on this, more on your markets, your money. Power Lunch back in 2.